Hello and welcome to the look ahead for Tuesday, the 26th of March with me, Fiona Cincotta, Senior Market Analyst at City Index. So we'll jump straight in tomorrow. First up, we'll be looking at German consumer confidence data, GfK consumer confidence. Also tomorrow, we've got US durable goods orders, US consumer confidence, and ECB Chief Economist Philip Lane is set to speak. So just kicking off with that German consumer confidence, that's expected to come in just a little bit better at minus 27.8, up from negative 29. Now, what we're seeing here is this consumer confidence index is stabilizing at relatively low levels. And basically that's as the confidence remains hurt by continuing rising prices, although inflation has slowed considerably, and the weak outlook for the German economy. But what's really interesting, if we have a look at the DAX, you can tell that the DAX isn't focusing necessarily on that weak narrative, but more on the fact that the weak narrative means the ECB is more likely to cut interest rates sooner. We've also got the DAX along with the US equities hovering around those all-time highs on expectations that, as I said, the ECB, the Federal Reserve, global major central banks will start cutting interest rates. The ECB is expected to start cutting interest rates in June. And in fact, we heard ECB Chief Economist Philip Lane speaking today, and he said that there is evidence coming through that wage growth in the region is slowing down. Now, we do know that the ECB, particularly President Christine Lagarde, had said that the ECB had been concerned about strong wage growth, and they'd seen that as a hurdle to cutting interest rates. But those comments by Philip Lane suggest that the ECB really are well and truly on track now for a cut in the June meeting. So just having a look here at the DAX, we can see it's grinding higher, continues to grind higher. It's being guided by a rising trend line within the rising channel, in fact, that it trades within. Just hit a fresh all-time high today at 18,289. See that it's grinding towards that 18,500 level. Just be wary, though, that the RSI is well in overbought territory. So we could expect to see at least some consolidation here, if not a pullback. As far as support is concerned, there is minor support there at around the 18,000 level, which was the mid-March high. But the key one to be watching really is 17,600. That's the March low. I think a fall below there could raise questions about whether the bulls are still in control. Also worth looking about at the euro US dollar, particularly as I mentioned, as we've got ECB Chief Economist Philip Lane talking again tomorrow. Now we can see with the euro US dollar, it's just testing that 200 SMA really. It closed below the 200 SMA yesterday. It's trying to push above that today. That's at the 108.40 level. That's really proving to be quite a key level. And then I think if we do see a break below there, then 108, again, that could open the door then to a move towards 107. On the upside, if we do get a close above the 200 SMA, that's going to be an encouraging sign for a move back up towards the 109 round number. So the other thing that we've got going on tomorrow, I mentioned, was the US durable goods orders. US durable goods orders are expected to rise 1% month on month after falling 6.1% in the previous month. Now, the US dollar has been very well supported after last week's Federal Reserve interest rate decision, which actually saw the Federal Reserve adopt a slightly more dovish stance and suggested that 3 interest rate cuts were still on track, even though inflation has been moving higher. And I think what's interesting was the fact that the Fed even upwardly revised its inflation forecasts and growth forecasts and still maintained those 3 rate cuts So that really does lower the bar as far as rate cuts are concerned. So, even if we get strong data coming in, it's, we can see that the Fed here are really keen to cut, but the economy is showing resilience. And I think we're seeing now that other central banks are having to cut and are starting to cut. SMB started to cut. Bank of Mexico have cut, but we're also getting sort of quite dovish comments from or stances, or more dovish stances from other major central banks, such as the ECB, such as the Bank of England, such as the RBA, and so that's actually making now it look as if the the Federal Reserve may be towards the latter end of those cutting interest rates. But also we're finding that the US dollar is being strengthened after the SMB cut, which is driving flows into the US dollar. But here we're looking at the US dollar, Japanese yen. Japanese yen is really having an interesting ride. I mean, we can see that it's weakened really significantly across the month of March. And that's despite the Bank of Japan hiking interest rates. And despite we had sort of threats of intervention from Japanese authorities at the start of this week, and it hasn't really done that much. So that's something to be interesting in. Something to be watching. That threat we're around that 151.90. That's the multi-decade high from 2023. And that's sort of the line in the sand, if you like, for where perhaps Japanese authorities may intervene. And they've been talking about it. They mentioned it today. Didn't really bring the yen too much, or the pair too much away from that level, and strengthen the yen that much. So the pair still trades caught between that 151.90 and the 150.90. That was the earlier 2024 peak. So if we do see some more traction from the bulls, a break above that 151.90 to 152, 155, there's going to be a lot of jitters about intervention at those levels. On the downside, below the 150.90, then I think keep your eyes open for the 150 psychological level. But actually, the trend is still looking really quite bullish there. That then brings us on to gold. Really interesting one as well. I mean, looking at this chart, we can see that despite the strength that we've seen, the recent strength that we've seen in the US dollar, this is still quite a bullish chart here. So we've seen a series of higher highs. It's trading within that rising channel. We've also seen that all-time high reached last week of 22.22 has since pulled back on that US dollar strength. And I think short term, we're just seeing it closed below the previous all-time high of 21.95, which I think is significant. But it's still being held up above the previous all-time high of that 21.46 level. So they're the levels to be watching. If you're looking for a breakout on the higher ground, then watch out for 21.95. Above there, we're going to get some a rise back up towards the 2,000 and 2222 level. On the downside, I think we're still constructive on gold, even if there is some short-term weakness, as long as it remains above that 2086 level, which was the level that we saw at the beginning of 2024. So if you like what you've seen, then please do give this video a like. And if you want to receive more videos like this, then please do subscribe. See you tomorrow.